Crypto trading bots are computer programs that automatically execute trades on cryptocurrency exchanges based on predefined rules and algorithms. These bots have become increasingly popular in recent years, as they allow traders to automate their trades and take advantage of market opportunities even when they are away from their computers. In this video, we will discuss the benefits and potential problems associated with using crypto trading bots. Some of the potential benefits of trading bots are: one of the main benefits of using crypto trading bots is that they can help traders to save time and make more efficient trades. Crypto trading is a highly dynamic and fast-paced market, and it can be difficult for traders to keep up with the constant fluctuations in prices and other market conditions. By using a trading bot, traders can set their rules and algorithms once and let the bot do the rest, freeing up their time to focus on other tasks. Another benefit of crypto trading bots is that they can help traders to make more accurate trades. Many trading bots use advanced algorithms and machine learning techniques to analyze market data and make predictions about future price movements. This can help traders to make more informed decisions and potentially increase their profits. In addition to these benefits, crypto trading bots can also help traders to manage their risk. Many trading bots have built-in risk management features that allow traders to set stop-loss orders and other types of risk management strategies. This can help traders to minimize their losses and protect their capital in case of market downturns. Despite these benefits, there are also some potential problems associated with using crypto trading bots. One potential problem is that trading bots can be expensive to purchase or develop. Many trading bots require a significant investment of time and money to set up and maintain, which can be a significant barrier for many traders. Another potential problem is that trading bots can be unreliable. Many trading bots are based on complex algorithms and machine learning techniques, and they can be prone to errors or bugs. This can lead to losses and other problems for traders who rely on these bots to make their trades. Another potential problem is that trading bots can be hacked. Since trading bots are connected to the internet, they can be vulnerable to hacking and other types of cyber attacks. This can lead to losses and other problems for traders who rely on these bots to make their trades. Crypto trading bots can be a powerful tool for traders looking to automate their trades and take advantage of market opportunities. However, it's important to keep in mind the potential problems associated with using these bots, such as high costs, unreliability, and security risks. Traders should weigh the pros and cons carefully before deciding to use a trading bot and always keep an eye on the bot's performance and security. It is also important to note that, crypto trading in general is considered a high-risk investment, hence one should be well informed before making any decision.